I'm Greg Hunter. Welcome to USAWatchdog.com. Coming up, the publisher of the Trends Journal. His name is Gerald Celente. He's the top trends researcher in the world, I think. He came on in November on USAWatchdog.com. November 1st, I was the first to have him on and said, hey, could you give some of your 2018 predictions? He said, sure. One of the things he said, we're going to have a 10% correction in the stock market. Ding, 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 ding. Already happened. So I'm going to waste no time in bringing Gerald Celente back on to USAWatchdog.com. Gerald Celente, thank you for joining us today on USAWatchdog.com.
Well, thanks for having me on, Greg, and thank you for all that you do with USAWatchdog.com to bring such great information to people in such a wide variety of information from people that don't have agendas mostly and just really want to put out the facts and the not put out the spin. So thank you very much.
Well, good to have you on. I know you've updated your 2018 economic forecast. I want to get into some geopolitical in North Korea and the Middle East as well. But I want to start with that 10% correction, which has taken place now. Some of it's come back. But you have, just put out February 21st, just last, week. You put out a new updated look-see of what's going to happen in the economy, and some of it good, some of it not so good. Tell us what's coming down the road for a new updated forecast for 2018.
Okay, let's talk about the stock market first. There's something that people should understand about it. What got the market to where it is? Cheap money. Bingo, end of story, period, paragraph. They borrowed money for nothing. You had zero and negative interest rate policies. Since 2015, the Fed has raised rates 5 times. They're at the grand total now, as we speak, of about between 1.25 and 1.50. That's nothing. 5 years, put in inflation, there's still really negative interest rates. So that's what's juiced the markets. Again, the facts are there with stock buybacks and because they're borrowing money for nothing and with merger and acquisition activity. Now, the markets are very separate from the rest of the economy. Again, these are only the facts, and the facts are that 90% of the stocks in the United States are owned by 10% of the population, who own on average about $350,000 worth of stocks. The rest of the stocks, that other 10% owned by the rest of the people, whether it's in 401ks, pension programs, it only averages out to about $15,500. I'm mentioning this because all the money is at the top. Now, you saw what happened on February 2nd. The reports came out that wages are going up. They're concerned about inflation going up. And to stop on that wages, by the way, just to put it into perspective, the wages went up disproportionately for people in managerial jobs, in higher end. 80% of the workforce, their wages are still lousy and trending the same way they were. But anyway, that's what brought the markets down. The fear of interest rates going up. Now, as you mentioned, we had forecast a 10% correction. Here's our forecast now, having laid the foundation. We believe the Trump rally is near its peak. It may go up more, and here's why it will. He's allowing companies to bring back money from overseas. All that dough they got stashed over there they haven't been paying taxes on, they're going to bring it back and get a great tax break. Now, here again are only the facts. George Bush did that back in 2003, 2004. You know where the money went? 96% of it went into stock buybacks, not capital improvements. Again, Trump gave them a 21% tax rate from a 35%. That money is not going to go, most of it, into capital improvements. We believe it won't, because when you look at S&P 500 earnings, they're doing really great. They're expected to have a 19% increase this year, 15% last year. But the money isn't going into capital improvements. It's going into stock buybacks. Again, a fact. The money that's already come back from overseas, according to the reports that are out now, Barini Associates, it's going back into record levels of stock buybacks for this early in the year. That's going to juice the markets up. What's going to keep them down is rising interest rates. And we believe the Fed is saying they're going to raise interest rates 3 times and possibly 4 this year. Even at that, they still won't be high. And even with the screaming about, the yields going, Treasury yields going over 3%, by standards, that's very low, 3%. But it's shaking the markets, which shows you the volatility of the markets. So having said that, we are not betting on 4 interest rate hikes, and we say we only may have 2 in fear of bringing down the equity markets, which won't hurt the general economy, but will hurt the nation psychologically in terms that when a market crashes, people think it's crashing all the way down. This is very different from the dot-com crash and the panic of '08, when people were involved at different levels, whether subprime mortgages or everybody buying into it. But the psychological effect won't be good for the markets, but it won't have that much of an effect on the economy.
So you're not expecting another 10% correction from here?
Possibly, yes. And I'll tell you the possible why. The possible why is a black swan event, and particularly war. I mean, you can see what's going on in the Middle East. Now they're bringing that guy Netanyahu over there in Israel up on charges, as they have been for many years. And one of my sayings, and it goes for any country, anywhere, any place, when all else fails, they take you to war. And they're ratcheting up war in the Middle East between Saudi Arabia and other countries against Iran. Again, this isn't who you like, what you want, what you wish for, what you think. It's what is, as we say it. And if there's a war against Iran, look at oil prices already. They're floating back between the $60 and $70 a barrel, down from their lows that were back, a couple of years ago to what? $28 a barrel. I'm mentioning this because go back to what happened on February 2nd. What was the fear? Inflation. If there's a war in the Middle East, you will see oil prices spike to above $100 a barrel. If that happens, bam, not only the U.S. equity markets, you'll see the global equity markets go into bear territory, because there's something else that really needs to be addressed. And that is the markets are overvalued according to price-earnings ratios. They're in the 26 range. 14 is usually the average. They're near historic highs by many measurements. And number 2, they're over-leveraged with all these ETFs and all these other things that are driving the markets up. So you have over-leveraged, overvalued markets, rising interest rates, and then if war breaks out, nobody can tell the wild cards. Oh, and one more thing, rising interest rates. Look at the numbers, Greg, that came out last week on housing. Mortgage applications down, purchases down on all different levels as interest rates are going up.
And that's just at peaking over 4% for a 30-year money. 4%. I mean, I think the long-term average, I just had Michael Pinto on, he says, listen, the long-term average is set mortgage rates off the 10-year Treasury. Why they do that, I don't know. But he said and it's a multiple higher than, a percentage higher than the 10-year Treasury. He says the 10-year Treasury for the last, since from 47 to 2007 was about 7%.
Yeah. Oh, Pinto's great. He really knows his stuff. Yeah.
He's like
he's a real numbers guy, and he really has it down. And that's what I was saying.
And you're pointing out that mortgage rates at 4%, you're already seeing the housing market crack. I'm sorry, I interrupt you. So at 4%, a little over 4% for 30-year mortgages, you're saying, danger, mortgages are already cracking.
Exactly. And again, what Pento was saying, what I was saying, that you're looking, the market's going berserk when they see a yield going at 3%. And what did Pento say? From 47 to 2007, the average is what?
About 7% for the 10-year
Yeah,
Treasury. So
yeah,
that means if it goes back to the average, I mean, mortgage rates would be 8%. Something like that. And what would
exactly.
happen to the housing market if it just went to 5% for 30-year money or 6% for 30-year money?
Again, the numbers came out. We're only talking numbers here. And the numbers came out this past week, and you can see where they are. They're down. Applications, the numbers are, by the way, here in New York, you go down the city in the hottest spots, Soho, all the hot, when I was a young guy, there weren't hot spots, but now, of course, it's a whole different world. But anyway, uh, you're looking at decreases in rentals prices, retail rental at the hottest properties in the city are off 18% in
Wow.
2017, and they're going lower now. You see for rent signs in some of the most high luxury ends in New York City. So, and then you're also looking at the luxury market and in the commercial market, there's slowdowns in both of those ends as well. So the nation cannot take a hit. It's too volatile right now. Again, going back to the markets, two words: overvalued and overleveraged. I'm not making it up. The numbers are there and the facts are there.
I want to just go back to, I'm in this weird paradigm of, 1 minute we're about ready to go to war with North Korea. The next minute we're about ready to go to war in the Middle East. It's just like whack-a-mole. And now the Russian foreign minister, sorry, I'm an old guy, the Russian foreign minister Lavrov is warning, in the second warning, to the U.S. to get out of Syria. That to me sounds, I don't know, ominous.
Well, again, you know me. I mean, I put my money where my heart is. I launched Occupy Peace, as you know.
Yes.
I closed down the streets. So we had Ralph Nader, Cindy Sheehan, Dr. Robert Thurman, Gary Null, and others. Paul Craig Roberts was here.
Yes.
And
Good man.
Yeah. What are we doing in Syria? What are we doing anywhere? To me, here going back to North Korea, we've been saying since the beginning there's not going to be a war with North Korea, and there's a very simple reason why, and that is if you bomb North Korea, say goodbye to South Korea, because the border is only 35 miles away from Seoul, South Korea, to the North Korean border. They have a population in that metropolitan area of over 20 million people. So if there's a massive attack against North Korea, say goodbye to South Korea, parts of Japan, and it'll be World War III. You don't see it happening. But our greatest concern is what is going on in Syria. And again, it's not whether you like the people, don't like the people, but the facts are that whether you like Assad or not, and of course Obama said Assad has to go, and Hillary Clinton said Assad has to go, and Frankenstein Kerry said Assad has to go. Well, you go over there and take him out, man. But anyway, look what they did to Libya. Look at the destabilization. Look at the Middle East. If the Middle East explodes anymore, as I said, and they drag Iran into this thing, you're going to see an explosion there that will bring down not only nations. Look what Saudi Arabia, with their intervention in Yemen, going on now, what, 3 years? It'll be 3 years in March.
The opposing team is Iran, so they're helping the Houthis.
Again,
it takes two to party.
But they didn't. The Houthis, by the way, they controlled northern Yemen for 1,000 years. That was broken up in 1990s. And now you have the United Arab Emirates, which is hardly reported in the news anymore, that is helping to fight against the Saudi people that the Saudis are trying to put back, and they were part of the Saudi coalition. So what I'm saying is this is a losing game. We can't see any victories here. There are none to report over the last how many years. So what we're saying, Greg, is more destabilization in this area will affect geopolitically and economically. And that's the ones to watch. Because again, if oil prices spike, say goodbye to the economies, not here, but worldwide. Look, you know the numbers. What's the consumer debt in the United States now?
It's record levels. The Fed President Kaplan was worried about it. Worried about that,
yeah.
and yeah.
Over 13 trillion.
Yeah.
How about that student debt? Oh, and how about 78% of the people living paycheck to paycheck? I mean, these are numbers I'm not making up. So now when you put more pressure on it, now let's go back to rising interest rates? Just forgot. Hey, how about all that debt you got? You got to pay more because interest rates are going up. Oh, and then I forgot. How about the government debt? Oh, we're taking on more. Then they got to sell treasuries, right? Yeah. So if interest rates go up too high and too fast, this thing goes down quick.
I know you don't give investment advice. I know you don't. But I always try to ask people for the little. I had a woman ask me about, should I be in a credit union or should I be in a bank? And generally credit union's better, but you're still working with Federal Reserve notes, which is a debt instrument. You know, debt is money and debt is an asset. We're going to find out neither is true. So what are you doing? What are little guys should they do to protect themselves? Own your stuff? Own gold? Right. Own food? Own PB? What should little guys do?
Well, again, I'm not allowed to give investment advice.
I got it.
I'll crack down on it. But I'll tell you what I would do, what I do. Oh, here's what I'm suggesting people watch. Watch gold prices. If you want to see the direction the markets are going to go in, watch gold. So what happened when the markets went down in early February? Gold prices went down with it. And we said to our subscribers, Trends in the News broadcast, this thing isn't crashing. Because if it was going to crash, gold prices would go up. And they're going down. So what we're saying to people, think for yourself, but our forecast is gold has not been able to break strongly above the 1380s mark for years. For 4 years now, for 4 years, Greg, and on your show, I've been saying gold has to break over $1,450 an ounce, stabilize at that, 1480, 1450, 1440, 1470, playing around that range for a couple of weeks, and then bam, Bitcoin bounce, way over 2,000. That's what we see. So we're telling our subscribers, watch gold prices. Where gold goes, the markets are going to go. Because if interest rates go up too high, gold prices go down because the dollar will get strong. Now let me stop on that note too. What did Treasury Secretary Mnuchin say at Davos last month? The United States wants a weak dollar. Remember?
Yep.
And then Trump came out, well, he misspoke. He really didn't mean it. The United States wants a weak dollar. A weak dollar is good for gold and all commodities because commodities are priced in dollars. The cheaper the dollar is, the more of that commodity you can buy. So, the other issue to watch.
And you wait, before we go on, for the silver people, I could say, get him to say something about silver. So the weak dollar is good for gold and silver?
Silver will follow gold. I've been following this. My first buy of gold was in 1978 at $187.50 an ounce. And I've never seen silver take the lead. Silver's always been the follower. Where gold goes, silver will trail behind it.
Okay, go ahead. I'm sorry. Go ahead. So we've been saying at Trends. Go ahead. I interrupted you.
I was talking about I
Trump
lost
wanted
my.
Mnuchin wanted a weak dollar. They wanted a weak dollar. When gold goes, gold's going to go up. So watch if they want a weak dollar. It's good for gold and commodities. I'm sorry. Go ahead.
Yeah. So anyway, no, I know. The next point was, now if the dollar gets strong, gold prices will go down. There's an opportunity cost of holding gold. If inflation goes up, no, gold prices won't go up unless inflation skyrockets. Because if inflation goes up, the dollar goes up, gold goes down. Inflation has to go up like, 8, 9, 10% before gold really starts booming. 5%, I would say. 5% and above. Now, the other fear, and it's a big one, of a strong dollar. Not only, the equity markets going down, real estate going down, people not being able to service their debt because interest rates go up. The emerging markets. The emerging equity markets around the world. By the way, the Trump rally, the markets have gone up 45% since he got elected on November 2018, 2016, November 8th. That's a big jump. Now, when you have a rise like that, there's always going to be a correction. That's why we said there was going to be a 10% one. That's just on average. Now, the global equity markets, many of them went up even higher than in the United States during 2017. One of the reasons is the cheap dollar. You can see the dollar's in the 3-year lows. That means they're borrowing dollars with their currency. And they're borrowing more. Now, if the dollar goes up, they got to pay back that debt with a weaker currency. That'll drive down the emerging markets. So a rising dollar has more implications than just the United States. You'll see those emerging markets crash, and a lot of dough is going into those, big time. So that's where we're at a leveling point.
And you're saying that the bet is a weaker dollar.
Yeah, we're betting on a weaker dollar. When Mnuchin is no dope.
No.
I mean, this guy didn't just say this because I misspoke. He means it. The United States wants a weaker dollar so we can increase our exports. It's good for the manufacturers who sell overseas. And by the way, I would say the major element that I support Trump for, because there are a number of them things I don't, is the trade policy. It is the biggest ripoff ever created in the history of this nation. Brought to you by Slick Willie Clinton, Slick Willie Slimer Clinton, lying Slick Willie Clinton. I spoke, but I didn't inhale. I didn't have sex with that woman, Monica Lewinsky Clinton. When he, not only with NAFTA, that's taken away hundreds of thousands of jobs, but more so, what people don't know, was he's the one that brought China into the World Trade Organization.
Mm-hmm.
And you were talking about Korea before. Remember when we were young guys and you mentioned the Soviet Union? You gotta hate those commies, those dirty, lousy red commies. How we were taught to hate the communists. Hey, and now Clinton says we could do business with them. They're still the Communist Party. When Clinton brought China into the World Trade Organization, it went into action, by the way. He laid the foundation. They joined the World Trade Organization 2 weeks after 9/11, when no one was paying attention. Since they joined the World Trade Organization, thanks to Bill Clinton and pushed forward by George Bush, we've lost, according to the Economic Policy Institute, 3.5 million manufacturing jobs. 5% of China back then was middle class. Today, 35%. They're the biggest tourist group in the world, and they're buying up the world. The United States manufacturers, multinationals, Europeans, sold this nation and Europe out. Here's the deal. I want to sell my cars over there in China. Well, you got to pay a tariff, about 23 to 30%. But I'll tell you what, manufacture them over here. Give us your technology. You could partner up with one of our government firms. You can't be a full owner. You can only own 49%. And that's what every major company did, from aerospace to technology to automobiles. They gave away all the money that we, the people, paid for this research and development, so they could get their stuff manufactured cheaper over in China, sell to the Chinese, bring the stuff back over here, and mark up the price and sell out our nation. That's what they've done. So the one thing that I really stand behind Trump is, these are not trade agreements, they're sellouts. Why are the Clintons worth almost $1 billion? Why is Nancy Insane Pelosi worth $100 million? Why are all these people worth tens and hundreds of millions of dollars? Morons call them campaign contributions. Adults call them bribes and payoffs, and they've sold us out.
I want to get before we go. I want to get to this. I mean, they used information paid for by Hillary Clinton, the DNC. She took over the DNC. It's a fact. Down in Brazil, put it in her book. She paid $12 million. The FBI and DOJ, corrupt as they are, used it for a phony FISA application. But I think it's because they have to cover the fact they all committed a lot of treason with the sale of major uranium assets in the United States, major bribe taking, as you were just talking about. And the Clintons are at ground zero with Bill Clinton with his $500,000 speaking fees from the president of a bank to doing the Uranium One deal. I go, is the rubber going to finally meet the road? I mean, people think, oh, nobody ever goes to jail. I think people are going to go to jail. And I want to get your trend forecast on the corruption under the Trump administration. Do you think it's going to come to a screeching halt? Is the Trump empire going to strike back?
I don't know. You know, there's a lot of pressure when you're in Washington coming from all different ends. And, you know, I mean, who knows, you know, what's going on behind the scenes? I don't think anybody really does. And again, when you talk about, you know, look what happened with the banking crisis. I mean, you know, convicted of felonies, convicted, and not one head rolled. I mean, every day, you know, they're coming out, Wells Fargo did this one, HSB did it, all the time. They pay a fine. It's a neo-feudal society, Greg. There are different laws for the political nobility and the economic elite.
The FBI missed another 17-person killing in Florida. They also missed the Pulse nightclub, the Fort Hood shooting. They missed Dylan Ruth, who got a gun, was able to buy a gun. They missed San Bernardino. I mean, it just gets to the point where how come nobody gets fired, let alone go to jail? Why doesn't anybody at the DOJ and the FBI go and get fired? They're obviously incompetent if they've allowed this many mass shootings. And in most cases, they knew something about him or should have known something about him.
It's in a city, state, and country near you. Too many bureaucrats, too big, and they're protected. You get those jobs by being a member of the club. And again, I began my career by running political campaigns in Westchester County at a graduate school, the Yonkers campaign. I was the #2 guy. It's a city of over 300,000 people. I was the assistant to the secretary of the New York State Senate, designed and instructed American politics and campaign technology at St. John's University, and was chief government affairs specialist for the chemical industry. This picture right over there to my right of me and Ronald Reagan. Hired him in 78, I believe. It was a 76 or 78 when he was the election. It had to be 76.
Yeah.
Yeah.
He didn't win, but
This is 2 days before he's announcing he's running for president, speaking to my group, and I'm with him for an hour and a half. So I've been there. I know what it looks like. I've been with presidents, princes, and prime ministers. The systems are oversaturated with inside people. The bureaucracies are too big, from the schools to every virtual institution, city, state, nationwide, and across the world.
Gerald Celente, thanks for coming on and giving us your updated 2018 forecast and analysis on the economy, the Middle East, North Korea, the whole deal. Gerald Celente, thank you so much for joining us today on USAWatchdog.com. Of course, you're the publisher of the Trends Journal, great publication at Trends. I believe it's trendsresearch.com is the actual website, correct?
That's correct. And thank you so much again, Greg, for having me on and for all that you do to inform people of the current events forming future trends.
2018 is going to be a dicey year, is it not?
Oh, yeah. But every year is.
Okay. All right. Thanks for being on, Gerald Celente.
Thank you.